Welcome back. Now, the South African banking sector in the past 6 years has had several executive movements and appointments. Some banks experiencing higher CEO turnover rates than others in the spirit of trying to keep the bank's growth and legacy afloat. Now, does the job hopping in leadership translate to major underlying issues in South Africa's banking sector? Executive Director at Denker Capital, Kokkie Kooyman, joins us now to provide further insights. Thank you so much for your time, Kokkie. Really interesting conversation that we're having on the musical chairs in the leadership level of the South African banking industry. Would you say that leadership changes in the South African banking sector have been pleasant in general, with Absa being the anomaly?
Yeah, no. Look, firstly, we must always bear in mind that a good CEO is an incredibly scarce article. And, especially somebody who has experience and has been in the industry. So you'd expect a turnover, and you'd expect that when there's a vacancy in one bank, or we've seen it now today with the insurance industry as well, with Yuri Stradom being appointed as the new CEO at Old Mutual taking, and remember, Yuri was at Sanlam not too many years ago, but okay. So when you've got a vacancy, you tend to look at someone in the industry.
Yeah.
But of all the movements that have taken place, Absa is obviously the one that stands out and had a lot of turnover, and that isn't good.
Yeah.
So generally, if you have a CEO coming in from another bank because the current CEO is retired, like old Nedbank, where Mike Brown retired, and Jason Quinn came in from Absa, that's normally a good thing. But Absa's had excessive turnover.
All right. Well, I'm going to dig deeper into some of those factors that you mentioned. But would you say that the leadership challenges at Absa and really just the instability there at the top, that's directly correlated to its underperformance in the banking sector?
Yes. Absa, interesting operationally, hasn't done that badly, but as a share price that has dramatically underperformed. You can see that in the D rating, where the other banks are trading at, let's say, a price to NAV, which is a metric we use to value banks specifically, but First Rand trading at 2 times, Capitec at almost 6 times, Nedbank at 1.5 roughly, Absa below 1. So you can see the market is putting a discount on Absa because of the leadership changes. True, Absa had been affected a bit. There were a few one-offs that hit them last year in Ghana, in Nigeria. But Absa certainly seems to have had instability. And also there seems to be unrest inside Absa about the changes. It almost looked like Ari Rautenbach was forced to leave, and that's never a good thing when you've got a divided team internally.
Yeah. Let's talk about the dynamics of internal and external appointments. You mentioned, of course, that it's okay. Like, for example, when Mike Brown retired, Jason Quinn came in externally, where it wasn't anything to do with what was happening in leadership. He just retired. But would you say that there is more of a risk of lower investor confidence now more than ever when a bank's leadership is sourced from outside rather than internally?
Yeah. Look, Capitec and First Rand are two very good examples of banks that have really set themselves apart with a very strong culture, a very strong belief in how they do things. And so for Capitec, it is very important to always, if you can, source from within, which I've been able to do. You don't want to get someone to come from outside with a different culture, different way of thinking. Same with First Rand, slightly higher risk. They took Mary Vilakazi, who was at Momentum, same group, same culture to a certain extent. But when you have a CEO, a change, the preference must always be from within. and so that is always better because you've had time to, firstly, you motivate people inside your own organization to, if you work hard and you do well, you'll get recognized as CEO. And secondly, the person knows the organization. I mean, sometimes it's good to have somebody come from the outside. Jason Quinn, for instance, arriving at Net Group and having experience Absa, having had time to think about mistakes made at Absa. But then Mike Davis could have been upset at at Net Group because he potentially was a successor, and he could have said, "Look, I think I should have had the job." He actually did think he was in line, but he's quite happy to work with Jason Quinn. But you're quite right. Ideally, you get succession from inside. And if you haven't got that, it means there's something wrong with what we call in sporting terms the bench. Your bench wasn't deep enough, and you didn't have enough reserves to build up towards future leadership.
That's actually a very interesting point that you make there, Kokkie. I know that the attention is mostly focused on CEO changes, but how critical is it to get it right on a chairman and board level? And of course, as we have seen now with the changes in the chairman at Absa between Sello and Renee.
You're spot on. You're spot on. The board, and especially the chairman, are hugely important. And to a certain extent, I think a lot of the problems at Absa also arrive or are due to board level. The same with Old Mutual when they had that week's period which forced him to bring in Ian Williamson. I directly attribute that to board decisions, that the board wasn't in tune and made the wrong decisions. If I can just go to sporting analogy quickly, sadly, yesterday evening was great, Man United, but I'm a Manchester United and we're following them. And if you look at how many coaches they've had, but the problem lies at board level. Because the board and the CEO was appointing the wrong coach and then didn't give the coach who they appointed enough time. Now, the same at Absa, I think too many CEO changes directly goes back to at the board. You didn't investigate enough. You didn't actually look at the alternatives. Something's wrong at board level.
Well, it's quite interesting because, I mean, these CEO changes, these leadership changes are also coming from banks that have been quite stable. I mean, you mentioned Capitec, that's really the darling of the JSE in the banking sector. And today, also the CEO designate at Old Mutual being announced this as Old Mutual is gearing up for the opening and ramping up of its own bank. So are banks here preparing for a new phase of growth spearheaded by fresh minds?
So look, banking is becoming increasingly competitive. And so the leadership has become very important. Now, by the way, Warren Buffett has just retired as CEO of Berkshire Hathaway at the age of 94. And his successor, Greg Abel, is 62. But it is true, especially in banking, more and more you need to be very tech savvy, as we call it. And interesting there, you can see the Old Mutual share price being up 6% today because Yuri Stradum was appointed. And the market obviously thinks this is a very, very good appointment and he will make a big impact at Old Mutual. And I think he will. So you're quite right. You need to be, the CEO needs to be not only a leader of people, because that's the most important thing, but also have really good understanding of what is happening and the changes in the whole financial services industry. I mean, Capitec, good example, the profitability increase recently has come firstly from going into insurance. And now also from going into data providing. So it's not pure banking anymore. So your CEO really needs to be an exceptional person.
All right. Well, thank you so much for that very, very insightful conversation, Kokkie. Really, really appreciate your time. That was Kokkie Kooyman, Executive Director at Denker Capital.